All right, welcome and thank you all for attending the weekly Delphian meeting. So today we got an action-packed hour for you. So I'll go through some feedback. Sadir had requested the feedback tracker, so we'll go through that real quick at the front. I'll go through and do a market update, and then Shawn's going to take over and update some of the earnings trades for this quarter. And I think we're going to have Dave do a calendar trade talk for like 15 or so. And then Joe will be at the end for his 5 to 10 minutes of enlightenment. So, so definitely a lot to go through. So let's get started. All right. So, Sadir, are you there?
Yeah, can you hear me?
Yeah, gotcha. Loud and clear. Yeah. All right. Okay, so I brought up the feedback tracker, and just for everyone, this link is put out in the weekly email, the reminder, and the post replay. So basically, it's let's see, sent this out this morning. So it's just down here, the feedback tracker. You can click on it and update it. Anyway, okay, so I think we got the IYT. I've been out all week, so I just got back. So I'll check with our programmers to see if we can get that into the system. I don't see why we shouldn't. So the next one, you had note capability for the virtual portfolio. Yeah, we'll discuss that. The problem right now is virtual portfolio is so big. So we've been trying to shrink it down so it'll just fit on one page. So you don't, I have to go in when I'm doing all my tracking, and I screen down to 80%, so it'll all fit on the same page.
Well, what I was thinking on that, I've just started using the virtual portfolio for a trade idea I have,
Okay.
and in the portfolio there is a little gear or icon. And I like all the stats that it gives you.
Yeah.
But, like there's this little gear that allows you to close the trade or copy the trade or something like that, right? When you go into one of the portfolio with a position.
Right. The gears on that talks about, leg.
Yeah. The leg actions, and or the position actions. And one of the things I was wondering if one of those drop downs could be like a little pencil and a note pops up. Yeah. Because one of the things doing paper trading is I want to put down, I think most people would, why I took the trade. Now, earnings, of course, you know why you took the trade, but on a different idea. Let's say I took the trade because it transitioned to what's showing on this, it's transitioned to state 2, and the win rate for a bolt put was on that day showing, 80%, right? So you want to be able to document why you took the trade in a little note, and it doesn't have to be in this table, but maybe just like under one of the gears so you could pop back to it.
Yeah, well, I think the solution to this is, if we go to that strategy, I think at this point we already have this functionality where you enter a new trade. I'll show you real quick. At least.
Yeah, you have to add the stops and all that.
Well, yeah. So you have the news. Okay. Let me see if this. I should have done a study. So down here, we have this where you can basically do a write-up. I think
I didn't realize that was there.
Well, I don't think you guys have it, and I think it's only for admin. But
that's why I didn't see it. Okay.
Yeah. So if you put something here, when you know, on the virtual portfolio, it would be under that, you know, when we go into the portfolio and you click on the, excuse me, you know, where you pull up the position. Yeah, so this will be renamed. So like it's not a hidden hyperlink. You know, it'll tell you exactly, you know, position analysis screen, which is this. So then the notes would be down there.
Oh, that'd be perfect. That'd be perfect.
Yeah.
That's the only thing that because you gotta remember why you did it, right?
Right. Yeah. Yeah. Okay. All right. What else we got? Studied one. Is this the email you're talking about?
When you get the daily studies email, now it links to a page.
Right.
But it gives you all the things. It doesn't tell you what study. It's like RSI bottom or 1 year SPX correlation.
Yeah, if you pull up like long call, high probability, or you know, it won't. It just has all the symbols, not the actual strategy, right?
Right, and it used to. And the advantage of having the strategy is when you go to the studies page. You know, if you want to change the parameters, like I usually do a bull put for 30 days instead of 60 days.
Right.
And I want to see what the win rate is going to be.
Right.
You have to pull it. You have to pull it down by that strategy name.
Right.
And without the strategy name on the studies, then you kind of got to hunt over in the screener and things like that. And it used to be there, right?
Yeah. Well, we put the backtest button back on that studies page, so you can backtest directly from there. I don't know if you saw that.
I did not notice that.
Yeah, there was enough complaints that we put it back. Yeah, let me.
There, the daily trades.
Yeah, let me pull it up. Because this is going to be, we're going to move the screener one to this will just be the resident page. So you're saying, you know, like if, well, there's nothing there.
See, it used to say breakout or.
Yeah. So like here, if you do long call, there's no what strategy, right?
Yeah, is it a breakout? Is it a Keltner bottom? Is it, you know, it used to say that.
Yeah.
And that was handy to have.
Okay.
Right?
Yeah, we got room. We got plenty of room here. So.
Right.
Well, but yeah, the backtest button's back.
Okay.
So, okay, yeah, we'll get that column in. That's should be a quick fix. Earnings.
So this one, I noticed, I put earrings, I meant earnings, sorry.
That's all right.
You know, in the earnings plan, after the earnings date has passed, that entry line moves to the next quarter. It'll move to the end of the table and it'll has the next quarter's estimated earnings.
You're talking about in the plan, right?
Right, in the plan.
Yeah, I put in an expiration for them all so that they shouldn't.
Yeah, some of them are still rolling over.
And the problem is they were rolling before the bullish and bearish runner date. So like the bullish and bearish runner date occurred 2 days after maximum the earnings date, right? And so a lot of times if you go to the plan and you want to see that entry, the earnings date and all that kind of stuff, it has moved to the next quarter, even though today is bullish and bearish entry date, right? Do you follow? And I'm wondering if it can be delayed till after the bullish and bearish entry date, or if it's going to expire, if it's not going to move at all, till after the bullish and bearish entry date. Because it seems to move right after the earnings date.
Yeah. Shawn, what do you think?
Yeah, I don't know, because I know, like Josh said, we try to put that expiration date so we don't get these July ones populating until we push out the new plan. Like, so I don't know why that expiration date's not working properly. So it's something we'll have to talk to the IT team about. But
Yeah, because they all have an expiration of 6/30.
yeah, the end of June. Yeah,
I think it was 6/30, right?
I think so. Yeah.
Somewhere around there, or the 15th or something of June. So nothing, definitely nothing in July should populate. Okay.
Yeah, but currently they're moving, and they move before your entry date for bullish or bearish run, if they have a bullish or bearish run, right?
Mm-hmm.
Right.
So
So the runner date's moving? Like, is that what you're saying? Like,
no,
okay, the trade comes through, like we have earnings coming up, you know, and it has this trade, Stitch Fix.
right.
So on the, you know, on the 8th, are you saying that this thing moves?
No, I'm
Yeah.
saying that this whole row, Stitch
We'll be
Fix,
gone.
on the 8th will move to the end of the thing.
Okay.
It will show earnings for, let's say, 9/3,
Yeah.
right? And it'll move on the 8th, but there's still a trade coming on the 9th, right?
Right.
And that trade will be gone because the whole row has moved to the end of the table and showing it now an earnings date of September 3rd, right?
Okay.
And
Yeah,
I'm
'cause it's
wondering if that
probably
can be delayed till the very last, you know, till you're done with the bullish or the bearish runner, right?
Yeah. Okay.
yeah, because it's either moving. I guess it's either moving off of this date or moving off of this date, and then this date is in the future, so this date's kind of lost at that point.
Well, I think everything based
It
off of
seems to
that
be moving
earnings
off
date.
the earnings date. Soon as earnings done, the row moves.
Yeah,
Yeah.
it moves off the page into the end for the new date. Yeah.
Yeah.
Okay.
Okay. All right. We'll try and figure that one out. Okay. And
Okay,
then,
on the last one,
yeah.
you recall back a long time ago, I asked if there was a way to put the studies on the chart, right?
Right.
And you guys did that. I appreciate that.
Yeah.
When you go to the chart page and you go to the studies drop down, there are 50 studies, right? I mean, like RSI bottom, long call, RSI bottom, bull put, so on, right?
Yeah.
And what I'm wondering is, so you have, if you want to see them, you want to, on the chart, that's a lot of choices, right? So I'm wondering at the end of that table, whether we could have all long calls, all, because there's only 4 actual,
Right.
there's studies, but there's 4 actual trades, right? There's
Right.
long call, bull put, bull call, and long stop.
Yeah. Okay. Yeah, I get it.
You know what I'm saying there?
Yeah. Yeah. I definitely agree with you. Like when you do that pop-up, it's, I mean, you got to type in to find what you want.
Yeah, so at the end, if like, let's say you wanted to see on the chart every entry date where a long call type entry was suggested by Delphian, right? But
Yeah.
that would cover breakout, that would cover, I don't know,
Yeah.
SPX correlation, whatever. But then you could see long call was done all these times, right?
Right. Okay. Yeah, we can ask about that.
Okay.
I'm not sure. I'll have to ask about that one. Okay. All right. Thanks, Adir.
Thank you.
All right. Let's get back to it. To do a quick market update. Okay. So not much change. Nothing changed. I think they were all the same here. VIX did pop up a little bit, but you know, SPX still in 1, Russell in 2, Nasdaq, you know, in 2, looking like it'll be in the 1 here soon. But let's go through and let's take a look at the market board first. current state. So you can see we're pretty much flatlined right at 50. You know, that matches right up with, you know, the 50-day SMA, the 50 in state one. It seems like that's the threshold that we have to worry about, 50. So pretty much flatlining, even, you know, with the big move Monday, you know, it's creaked up. So it's just kind of flatlining here. You can see the 8s aren't moving much. That's 1 year. So, you know, just slowly creeping. You know, we did have that spike a couple weeks ago as far as the new lows, and then came right back down to earth. So that was, you know, nothing. Turned out to be nothing. You know, it's a good move down, but as soon as it you know, as soon as it comes back to the flat line, then you know, it's a bullish market. So you can see it actually made, you know, it showed up on the Richter scale here, but you know, we're back to flat lines. So the other thing I just wanted to kind of remind people, you know, we can also look at the bullish bearish. You know, it's worth a gander once in a while as far as like current state percentages, so you can see, you know, how things are going, you know, throughout this whole time period. And, you know, state one's been pegged, you know, up above 50 for a really long time. So this one I think is another kind of, you know, just another way to take a quick look as far as overall states. And this breaks it down, you know, with 1, 3, 5, and 7 as the bullish. So it puts them all together in the bears, 2, 4, 6, 8. So it's another kind of little tool that we can go into. Let's look at SPX. So we did bounce right off that, you know, and this is proven to be strong support here. Let me get up my little annotation tool. Target 3. So, you know, once it broke through, it tested once, twice. So now this is definitely a strong support. Something to watch for, that 4088 as far as SPX. Now the other piece we have here, the 50-day SMA, once again, it got tested, I think during the last meeting, and then pop right back up above. So this is obviously our critical, you know, for this move. It's been a very critical moving average. So definitely keep your eye on this. Yeah, definitely. So yeah, hopefully every uptrend we can find, you know, which SMA is going to be, you know, it's going to, you know, it's the support. So I think we nailed this one. Hopefully, you know, the next time around we can find, you know, maybe it'll be the 35 or something. I don't know. We'll have to check it out. Anyway, so let's go into the other two. Russell. There we go. So this one's fairly range bound. You know, hit that state 2, target 3. You know, bounced right off, came up, and just kind of going back and forth between, you know, the entry price. I think we're up a little. We're up some today. So you know, you got obviously your key levels here, and then, you know, down below your support and resistance. And, you know, currently we're above entry price, so that's also support right there. So those are the kind of key levels. Obviously, you know, we can't use SPX, you know, a downside other than the 50-day. So as far as the modeling, you know, this one and, you know, Nasdaq can kind of give you a little bit of downside support near term. So let's look at the Nasdaq. So this one, you know, popped up above the stop loss. So That's your near-term support. I would expect this as long as it stays up here within the next day or two for it to go into state one. For this market. So that's your near-term support there. Overall, just kind of nothing happening on the new lows. So that's kind of all quiet on the Western front for the market. So any questions or comments on that? I think I went over my time, Shawn.
That's all right.
Okay. All right. No questions. We're ready for the next go around here, Shawn.
Yeah, ready to roll. All right. So yeah, thanks everybody for taking the time, obviously. So I did want to mention though real quick, this is kind of some updates for the virtual portfolio, what I have thus far updated. So there's some additions that I need to make to this, but I did want to talk about what Josh was just showing, which is SPY or SPX and using that moving average. Josh has been talking about it for a couple of weeks or maybe a couple of months now, and probably since maybe the beginning of the year. But just personally, for myself, based on what Josh has been talking about, I've been using that moving average as a good spot, to buy options on SPY. SPY options, are a little bit less expensive than SPX, but personally, this obviously isn't a recommendation, but as you can see with that chart that Josh shows every Wednesday, every time we get that little bit of a dip, I've been almost buying ratio type options on SPY, meaning I might buy 5 call options versus buying 2 put options for protection in case that moving average doesn't hold. And it's been working really well. And if you looked at the chart, I think Josh had shown, or even this one here, I mean, you can see how many times, we've had a dip like that over the past, since I think like maybe October or November, where it's dipped down, 5 to 7 times or so. So those are, almost 5 or 7 times different entries that you could use when you're buying some of those options on the dip. So, there's not much of a back test that I was able to use to kind of confirm or validate that strategy that I've been using, but it has been working. So, just that being said, I just wanted to make a note that a lot of that information that Josh is kind of going over is really helpful, I think, and you can apply to some of your trading if you just kind of critically look at it and maybe do some further analysis on it and figure a way that might, benefit your trading and help you. Obviously you want to stay within your risk parameters, but it's been some great information, and I've been using it pretty much every time I can see that dip, So yeah, I just wanted to kind of put my 2 cents on that out there. So has anybody been using, that as kind of a way to maybe hedge or to buy additional positions or to maybe, add positions to their portfolio? Any comments anybody has on that just specific piece?
I have not, but that's a good idea.
Yeah, and it seems like some days we do get a little bit of a falter and the market does sell off a bit, but the puts definitely have been taking a hit, but that's fine. The ratio kind of helps me make a little more on the upside, and I'm probably not going to get any home runs and retire and quit the Wednesday calls because I won't be working for Delphian anytime soon. But you know what I mean? It seems like a pretty good strategy, and it's amazing how, everybody talks about this thing crashing and just selling off below, and then every time it makes that little dip, the market wants to be back above it, and it just runs right through it, So it's pretty amazing.
Shawn, if you recall, I think it's been a year now. You helped me do a study where if the major indexes fall 3 to 5%, 3 to 15%, 5 to 50% in 3 days or less, that a bull put works. And we had set up an alert. I've been doing that, and that's been working. Now,
right. What? Go ahead.
But that same study you had helped me with, I may go back and try this ratio. The trade we actually did in that study was, the trade rule was just a bull put, a 30-day bull put. Right? But this one might be interesting to change the trade rule.
Yeah, because I tried just doing long calls, but then it seemed like when you did get a break below, like I have a trend line plus that moving average set up, and it almost seems like when you get a break below and then it just holds below it for a day or two, they start sucking so much premium out of those calls that even if it does spike back up, I can't recoup my losses at that point, you know. So it seems like that's where those puts kind of help me say, okay, now I can maybe break even on this trade. And then, you know, if it does break it back above it, then I'll kind of reset it again, you know, and move it forward that way. Cause yeah, it seems like, and we've noticed it, Sid, here, we've talked about it, you know, from January to February to March, it seems like on these dip down, it almost seems like they're pulling out so much value out of those calls for whatever reason. You know, you would think that volatility would kind of be pumping in there, but it just seems like those calls are just losing so much value quickly. Maybe whenever it does break below that trend line or break below that moving average, maybe everybody is like, okay, here it comes, you know. I'm not sure. That's just me personally speaking. So.
Well, I've seen the same thing. There's a recent earnings trade on Western. Oh no, I can't remember if it's a study. I think it was a study on Western Digital, and it's a long call. And Western Digital has gone roughly just sideways since that.
Right.
At the premium, that call has lost like 80% of its value in the 5-6 days. Western Digital has gone sideways. And
oh wow.
And I'm like, how did it drop so much when the stock didn't drop so much? So you know, something's going on with that premium. They just, like you said, they just suck the premium out of it.
Yeah, I'm not sure, but that would be interesting to see that study, like you talked about, the one we completed, and try to use like a ratio. But that's good. As the bull puts, I mean, you said they've been working, so you've been pretty satisfied, I guess, with that strategy and kind of on some of these dips.
Yeah, the alert hits and I do the bull put, and I have not had a loser yet. So,
and we're not, and you weren't doing it just on not just on the indices, right? Are you doing it on individual stocks, or was that one that we did specifically for like IWM?
Yeah, you may not recall because I know you do hundreds of these, but we did the big four. We did SPY, DIA, QQQ, and IWM, right? Right. I
do remember, yeah.
And they dropped, it was 5 to 15% in 3 days or less, right?
Right.
And bull put will work. I think I ended up with like almost 90% success rate in that back test. So
right.
Then we set, or 85 or something, then we set an alert, right?
Right.
And that alert's been working. Every time it hits, I do it.
Right. Good.
Hey, Shawn?
Yes, go. Yes, Joe.
Just one question. When you're talking about ratios, can you just clarify what you're talking about there?
Yeah, sure. Perfect. Yeah, perfect. Yeah. So typically what I'll do is I'll obviously want to make sure my risk is in line with how much I want to risk per trade, because I'm taking these ratios, and they're not really like a ratio spread because they're not really a spread. But I'm taking these ratios as a whole. So in an instance, I might try to calculate, well, if the SPY comes back a certain percentage, I'll buy, let's say let's say SPY right now is 420. I might buy 4 of the 422 calls for a certain expiration out a couple weeks, and then I might buy 2 puts for the same expiration, and usually the equal distance away from the market as well. So if I buy 422 calls, I might buy 2 418 puts. So typically, if the market, so if the market spikes up, depending on and you gotta have, this is what we've talked about, I think before. It's not just to you, Joe, but to the group. So what we've talked about of having a plan. So typically, my plan in an instance like that would be, if the market spikes up and I've bought 4 calls and 2 puts, I'm going to try to sell 2 or 3 of my calls to cover the entire trade. So now I have a trade in my account. For free. So essentially, if I sell 2 of my calls, I now have 2 calls in my account and 2 puts in my account for free. Or I might have said 3. If I sell 3 calls, now I have 1 call in my account for free and 2 puts in my account for free. So I'll try to do that as well, so then I can basically, and that's part of my plan. So when I put the trade on, the plan is to try to cover it that way if I can, and if I can, I'm in the trade for free, and now I'm basically, playing with the market's money for the next week or so. But yeah, when I say ratio, I'm buying more calls than I am puts, because I'm expecting for the market to still be bullish, but I'm a little bit cautious, as Josh would say too. So cautious to.
But you're also buying both. I just wanted to be sure you weren't,
Yep.
you know, buying 2, selling 3 on an upside
Right.
ratio spread or something where we're net short options.
Right.
That's all I was trying
Right.
to clarify. So
Yep.
thanks.
Yep. Yeah, no worries. Yeah, so yeah, buying both, buying the calls and buying the puts, correct. Yeah, not like your normal, or not like a ratio spread would be. Yeah, exactly. So cool. And then, yeah, excuse me. And then from what Sudhir is saying, you know, just to kind of clarify that too, you know, that's something Sudhir had thought about and said, well, I wonder if we can do a study or do a test or do a back test that kind of uses this information. And we do have that, you know, within the screener. So if you use our screener, you can come into the screener and test and say, okay, well, what happens, you know, to the market? Or, you know, maybe I want to use an entry point. So if the stock, if the SPY drops 3 to 5% over, you know, a 1-day period or over a 3-day period, you know, maybe I want to buy some stocks then, because then the market might have a rebound and rally back up. And we've seen that quite a bit over the past. You know, you saw last week was kind of a little bit of a couple down days, and then Monday it was like boom, you know, the Nasdaq was up almost 200 points. So if you can catch some of those little dips like that, and in history, you know, if backtesting shows that, you know, the probability is on your side when the market sells off like that, that you get a little bit of a bounce, you know, testing that and using the bull puts or using long calls might be fruitful. So, you know, that's what we did. He came with an idea, we ran the back test, and the results were great. So that's just one example of something you can do within the platform to kind of run screeners and see what's happening in the market, and then say, hey, is this something that has happened more in the past that I haven't really recognized, or is it just a one-off event that's happening now? And the back test will show you that. You know, if you have 1,000 results from the past, you know, 17 years or 14 years, or if you have, you know, 10 results from the past 14 years, you know, okay, well, maybe if it's only 10 results, it might just be a one-off. But if there's 1,000 results, then you're like, well, okay, maybe this is something that actually happens. And like I said, I just kind of missed it a little bit. So any questions on that, anybody? And it's right here just to show you. I'll have to pull up the back test and just verify that I can share it, if Sudhir's fine with that. But what we can, not to put you on the spot, Sudhir, but
I'm fine,
we
you
can
can
see
share it.
we can see. I'll have to go in there and find it, because like you said, it was a while ago and I didn't remember doing it until you mentioned it. But yeah, under the screener section here, you know, stock filters, you can go down to price change percentage, and then you can say you want to look at a certain price change, find stocks that have moved between a certain percentage over a certain number of days. So you can use this screener to do that. And, you know, not only on the downside, but you can also do it on the upside. And there's just a lot of cool different things. Obviously, we've talked before about how big this screener section is, and it's massive. And it's really almost just coming up with an idea and then just saying, all right, let me figure out how to test this bad boy. So
I will warn people when you share it that when that alert hits, it's hitting when the market is going down fast. So you really have to have the guts to enter the trade.
Yeah.
Because when the way it was set up was the market dropped, the index drops 5 to 15% in 3 days or less. So when that's happening, it's scary, right? So and then it tells you to enter a bull put when all your emotions are not bullish. You know what I'm saying?
Right.
But it works.
Right.
It works. But you really have to clench your teeth on this one.
Right.
Shawn, I may have done that with Sudhir. I think I remember him doing that. So I'll try and.
You might have. Yeah, see if you find it too, and I'll look in mine too. Yeah. So yeah, it's cool. So yeah, perfect. Yeah, thanks, Sudhir. Yeah, those are good, and those are the things, you know, that we like to do. And I feel, you know, if you come with an idea and I'm not sure how to do it, I'm pretty honest to say, okay, well, I don't know how to do it. Let me come back to you, and get back with you. But those are the things that I definitely like to do. I like to take analysis like that, look at it, and see if there's a way that we can trade it, you know, and that's fun, you know. And like Sudhir said, we could have tested it, and it could have, you know, not worked, you know, and then we could have tried to optimize it and it still didn't work, or Josh, whoever did it with them. But when they do, then you're like, all right, well, this is something worth analyzing further. So those are some great points. So, What I did want to show you is, use the screener for sure. And then a back test like that, you can always track it in the virtual portfolio. Great tool to see, just like Sudhir had said, put it in that virtual portfolio. And if the market keeps tanking or the position keeps losing value over 2 days and you're stressed out and you're only doing it in the virtual portfolio, it's a great learning tool to say, hey, well, maybe this strategy just isn't for me. Me losing that much money over a 1 or 2 day period isn't what I want to do, even though my risk is defined because it's a bull put spread. But that'll give you a good idea of where you stand with that particular trading strategy within the virtual portfolio. Because if you kind of somehow tie yourself and your emotions to that virtual portfolio, I think it'll give you a good idea how you would react, in the real world when you're actually putting the money to the test. So I wanted to show you guys that. I wanted to talk about that. This is the similar results from last quarter. So if you guys remember, for the virtual portfolio, I had all these different metrics tracked, on the last quarter. I'm doing the same thing for this current quarter. So I did want to show a couple of these just so you can look at them. So the bullish pre-runners, column B, I'm going to have all this all this filled out eventually, hopefully over the next couple of days. But I did want to show you guys a couple that I'm already finished with. So if you look at the bullish pre-runners, we're talking about, barely profitable for the quarter, a little over $1,000, total profits 13,000, total losses 11,900 with a 1.09 profit factor. So really subpar, in my opinion. And I think a lot of us have kind of spoke about that via email and some other avenues lately regarding just maybe that volatility with some of those long calls kind of in the first part of the quarter, of Q1 coming into these trades. So you can see a total of 57 trades were put in there. I only put in trades that were confirmed. So if the trade was estimated at the time of entry, I did not do it. 57 total trades, 30 winning, 27 losing trades. So we can see a net win percentage of 53%. Really subpar from what I was hoping to see, or some of the back testing results like we've talked about before, with average days in trade 9.21. The interesting thing that I wanted to look at was I wanted to compare the bullish pre-runners with the bullish runners. The bullish runners, I was only pulling out confirmed ones as well, but all of the trades for the bullish runners should be confirmed because earnings has already happened. So when I was looking some of these up and it said estimated, I was kicking them out and not trading them, but I think that was an error on my part. And I think Sudhir, based on his comment earlier with the dates being moved for those bullish runners and bearish runners, the dates being moved in the earnings plan, I think that is what affected me in this trade sample size that I have here. So I got to go back in and correct that. So I couldn't figure out what the problem was, and I think Sudhir had brought it to the forefront when he spoke earlier. So, but being as it is now with this sample size, I thought it was interesting with the fact that, I'm a bit more profitable on the trade, and then my profit factor from a 1.09 to a 3.09, which is substantial. And then my win rate of a 79%, which is, about, 75% or greater is kind of what we're looking at. The main thing that I really wanted to focus on were the average days in trade. 7.36 currently for all the trades that I have within the bullish pre-runner that were completed, or even the 2 that are still open. So that's kind of what I was possibly expecting, was maybe we were in the bullish pre-runner trades a bit longer than we are in the bullish runners. This is a smaller sample size, so it's not giving me the exact details that I want to be able to say, hey, this solidifies the answer for me. But that is a little bit telling in my mind as it stands right now. So, other than that, we do have the volatility crush trades, which again, $37, almost $3,800 profit, 2.58 profit factor, with a total of 18 trades. Win rate, 56%. I don't like that, but as far as the profit with the type of trade we're talking about, the volatility crush trade, I think that seems fair. And then our price non-movers, barely profitable, $413 with a similar situation, a 59% win rate. So, I just wanted to kind of briefly show this to you guys. Again, there's some more work that I still need to complete on some of them, and adding some of those trades for those bullish runners, those ones that were still showing up as estimated. But, once it's completed, I'll give it to everybody, and then we can all maybe talk as a group and run some analysis on it. So does anybody have any questions kind of on these that I've set up thus far, or anybody want to speak to their personal results that they've had?
My results pretty well match this. It was not as good a quarter as before, but pretty close to what you're showing there.
Mm-hmm. And I think that's what we're trying to correct with, especially, I don't know how many trades you've done, Sid, here, but I've done a lot personally as well. And we're trying to see if there's a way to optimize some of that, because, if you're trading, let's say 200 symbols and you're doing, a 2-lot, now you're trading 400 round turns, and to make, 5% or 3% or 1% or something like that, obviously is a very low percentage. You're still profitable, but the amount of time versus, along with the amount of trades you're doing is substantial. So we're trying to see if we can improve that and, either get the stock list down a little bit, or, basically just figure out a way to try to optimize some of these trades. And it might be relative to, like we've talked about, the volatility on some of these, some of these options in the past quarter. But either way, we're looking into it. So if anybody in the group finds stuff too, please share so we can share with everybody. Like I said, I think collaboration is one of our, the key tools that we have as a group.
The only thing I would suggest, and I don't even know if it's possible to do, is if there is, you're generally, let's just take bullish runner, pre-runner, because that's the first one on the list. You're generally seeing how many times that worked for that stock, but I wonder if that can be correlated to SPX, right?
Right.
So
right.
Like if SPX was in state 2 or state 1, or, if it was in state 2, does that still work, right? Or
Right.
That's the only thing I can think of, is to correlate somehow with the general market state or general market direction to improve the probability of win.
Right. Yeah, and even Joe, part of the group with us now, like even Joe had mentioned that previously, of looking at possibly running some type of analysis where you're overlaying that chart on some of the studies to see if during the dip in the market maybe those studies aren't performing as well, and that's a similar what you're saying, trying to run some type of correlation or some type of analysis between the two, which I think will be fruitful. And once we get a little breathing room, that's what we're going to do as well. And that's probably one of the analyses we'll try to run, in a quarter. I don't know about next quarter, but we're going to try to do that. So,
yeah.
So yeah, I agree. We've talked about that, and that seems pretty fair too. So. Okay, cool. And so I just wanted to show that. I mean, I hope, like I said, to get all this done, I knew these two were completed, and I had the bullish runners. This one I just noticed, the 24 trades today at like noon, and I said, okay, well, I don't have time to try to figure out where those other ones are. And then when you mentioned that, Sid, here, I was like, okay, that seems like exactly where those trades are. So I'm going to start adding those others into the bullish runners. Hoping, obviously, this number goes up. Maybe this number goes down a little bit, but that's yet to be seen. So, I have all this stuff too, and you guys can do a similar. I don't know if anybody's really used this or not, but within the virtual portfolio, they do have that export tool in there, which is a really cool tool to use. So if I click on Vol Crush, if I have closed positions within the Vol Crush, I can do export. Click on export, it'll open it as an Excel file. Mine is opening them as a different type of Excel file that my computer is not wanting to recognize. So I saved them earlier, but they saved it as a different format. Now I can't find them. So, but you can see this one here. So when you do export, it exports it in here as the trades are within your virtual portfolio. And then you can run, delete columns and run further analysis on this if you want. So I just used it for that tool generation and for this week, but it's a great addition that they have in there, and I would recommend obviously using it. So it's pretty cool. So, we got a couple minutes, we got about 12 minutes till 2 o'clock Eastern time, 1 Central. Dave, do you have some time to talk about the calendar spreads? Dave has done some calendar and diagonal spreads personally. So, he mentioned that he would talk a
Shawn?
bit about, yes.
This is Lee. Before we get off this, can I ask a quick question?
Oh,
Okay.
of course.
Your price, let's see, your volatility crush and your bullish runners, they had real good profit factors, 3.09 and 2.58, where the bullish pre-runners, we don't know why, but it's not performing well. The question is, did you see a trend over the, we've been in this 4-6 weeks, this earning period. Did you see a trend where volatility crush, say, was having better results and is trending down, or was having poor results and is trending up? And the same question for the bullish runners and really for the bullish pre-runners. Do you see trends in there related to time?
I didn't see any specific trends, from first glance, and I haven't been able to dig into it that deep to see the different time outlays, because I did do that. So to come up with my average days in trade, I ran that formula like we had before, that calendar formula within Excel to say, I opened the trade on this date, got out this day, and here's how many days in trade I was. I haven't had a chance to specifically look at the trades that were, let's say, less than 8 days or more than 8 days, and did those trades become profitable or not? But that's something to look at. I think I want to add that in there to look at that, and then also try to find some of that, historical volatility plus the current volatility at the time the trade was entered, and just see if there's some type of, correlation between the two. So I haven't been able to run the first set of analysis on it yet. If anybody can, if anybody sees anything, that would be great. My first thought was, I knew that the bullish pre-runners, like you said, had this really low, profit, or even maybe a negative, loss. And I knew the bullish runners had a bit of a profit in them. So my first thought was, if this was 9 days, average days in trade, maybe I was going to have 5 days on average in the bullish runners, because in and out pretty quickly for the bullish runners. But it's not as big of a disparity as I thought. So that's yet to be seen once I add those other trades into the bullish runners. Okay. But I think that one chart that Josh had showed a while ago, where he showed those, I think he showed like those bull call spreads, and it was from like November, of last year to current day, or maybe to like March of this year or something like that. And it was just like the market was up, but then those trades were just flatlining. And, I've still yet to figure out what the cause of that was, but I almost just feel it's relative to volatility, which seems counterintuitive to me with the way this market has been and the way that there is so much chatter and almost uncertainty out there, that you would think volatility would be really high, but it's just not relating over to those long calls for some reason. I'm not sure. So the short answer is no, Lee. I'm sorry.
All right.
But I'm hoping to be able to put some more analysis into it to find out, because I think if we can figure out what's causing that might help us, one, get a lot of these trades down to a smaller sample size maybe, and take some of those other trades out of there, and then get these win percentages up. But I think we all agree that it was kind of a weird quarter. Everything was already so overvalued in the market, and even some stocks that had good earnings, still sold off after the earnings had happened. So it was interesting. And maybe some of that selling off was kind of an initial overreaction to the pricing being so high. And then maybe the stock rallied after that. And maybe that was why some of these bullish runners were doing a little bit better, because of that initial, I don't want to call it an overreaction, but the initial sell off after the earnings. So.
All right. Thanks, Shawn.
Sorry, Lee, that's not the answer you wanted, but if anybody can get in there and look at it further, I think that would be a huge help, so working together. So cool. But and again, so last week we talked about the calendar, the time spreads, the double calendar spreads. I explained it and want to try to explain it a little bit in a more proficient manner. Probably next week. I know I said this week, but probably next week. Now, Dave has done a couple of those in his personal account, and if Dave, if you have a couple minutes and you want to talk about them to the group, that would be great. And then everybody can kind of sit on those ideas for a week, and maybe we can discuss them in more detail next week. Do you have about 5 minutes, Dave?
Yeah. Can you hear me?
Yes, sir.
Okay. Let me know when I can share a screen here.
Yeah, you can go ahead.
You should be able to do it now. Yeah.
Okay.
It's cool.
Everybody see my? I'm using Thinkorswim here because it'll show up quick. I'm gonna run through several of these really quick, and like Shawn just said, maybe we can talk about some next. But I wanted to show some of the flexibility of calendars and diagonals. So first of all, my annotations are the same in all these charts. I'm going to fly through real quick. So I want to take just a second to show this. So let me zoom in a little bit closer here. Let's do it this way. Come on, Dave. Okay, so my color scheme here real quick is purple shows long options and the white shows a short option. So this is a typical calendar where my short call and long call were out of the money. So I'm playing this as a directional trade. So this was for Apple, and it was before earnings by a couple of weeks. So this kind of, you could, I'm going to evaluate this with a vol crush kind of thing or the pre-runner kind of thing. So just real quick, I got several of these. Don't ask a lot of questions, but I want to run through them, and we can then maybe see what's worth talking about next time. But I just wanted to show you some of the talking points to each strategy here. So when I opened this trade, the combination of buying the long call and selling the short call, the long call's twice as long. You notice this purple line is twice as long as the white line. The arrow here is the stock price when my trade filled. So I filled this trade here, and it was this much out of the money when I filled. So this was Apple. Calendars and diagonals, you want the short strike, the white strike is at the first expiration is the critical point on all the calendars and diagonals. The idea is to close on expiration at the short strike. So this is pretty close. I was actually thinking about managing this into earnings so that I'd have a long call, but it turned out to be the net debit to open it was 57 cents, and I closed it for $1.45. So about 90 cents profit in 4 or 5 days here, 5 days. So these are pretty inexpensive. All these trades are pretty inexpensive because the short call that you're selling is stated it's working for you compared to the long call, and it's depreciating quicker. So that's that one. I'm gonna just
Yeah, and that's a great trade too, Dave, to think about the 57 cents. A lot of people think of 57 cents and they think of $57, right? You're obviously talking a one lot or in that case, $57 for one lot. But when you talk about that, the position gained $90 over 4 or 5 days worth of time, you almost gain 200% return on the position in such a short period with limited amount of risk in that particular scenario. So.
Yeah, they're all kind of smaller trades, so to give you experience with managing the trade, but they're not home run hitters. They're like singles and doubles. So
right.
This is an example of the diagonal. So I sold, and one thing about this is I wanted to show down here. When I put this on, this is a semiconductor chip company, by the way. And implied volatility was low, was at zero maybe it was 3%. I think it was zero though. Just a couple of days ago when I put this on. It just goes to show you though, that just because IV percent is zero doesn't mean it can't go down. And so it did go down a little bit. Anyway, this trade is going to maximize if I hit right here at 160 on expiration of the short. Again, you want all these trades to go to the short call or the short option strike price. but you want them to move gradually. You don't want to get there in 3 days, which I'll show you one that didn't work out so well in a second here. So that's the diagonal. And you'll notice another thing about this particular trade is I legged into this one. I bought the long call when when the price was here about 151, and I waited to sell the short call after it had gone up almost $2. So if you think about it, that's almost like taking $2 or so off of this. Anyway, I sold it for $1.20, so we'll see how this manages over time. Anyway, it's more to be discussed. Let's look at a different one real quick.
And then stay on that real quick, Dave, for just 1 second. And I just wanted to mention that Dave was saying the most optimal value around June 14th is for the market to be at about that 160 price, because that 160 call is going to expire worthless, essentially, that he sold. And then that's going to be the highest point of value that he'll be able to get at that time for the July 150 call. So that's why that point is critical at expiration.
Yeah, and just to add on to that, June 14th, 15th, the June 15th is the Fed meeting, quarterly bigger meeting. And we had some shocks just before the last Fed meeting a week ago with all this talk about inflation. So I look for implied volatility to go up by about this time. So again, that's when all the diagonals, all the time spreads are volatility. You want volatility to go up from when you put it on to when they expire. So let me move on to STM here real quick.
Dave? Dave?
Yeah, go ahead. I'm trying not to take too much time, but go ahead. Ask away.
How are you selecting your short strike?
Most of these are on when I'm playing in a direction. The short strike is the 30 delta. So the 1 standard deviation-ish move is the short answer to that.
Okay.
Okay, so here's a combination. So I wanted to show you this. This is again a calendar where the short call is about half the time duration of the long call, and I put on at the same time a spread at the 30 days. You're trying to get the most out of the money where the expiration is with a shorter time period. And the reason I wanted to show you this is when I put this on, the long call was actually in the money. So this was an in and out, what they call an in and out vertical spread. Not halfway exactly in and out, so it wasn't 50-50, but it's, anyway, I wanted to show real quick, this is the risk profile of both of those combined, and you'll see by using the combination of the two, there's no risk to the upside at all. And the risk to the downside is about equal distant to the upside. So let me real quick just show you what this is just the calendar profile. All the calendars look like this little, mountaintop or volcano or whatever you want to call that. They call it witch's head on Thinkorswim, but that's where you want. This is where you want. This is the strike, short strike at expiration. That's where this is. And you notice if you've been trying to close the butterflies as a earnings play, it's kind of tough. You can never close right there. So that's just the calendar. The diagonal or the spread, of course, looks like this. And then when you add them both, you get kind of this interesting combination, which I think is pretty interesting. So again, I'll just move on to the next one.
Yeah, no rush, Dave. Too. Don't rush just for the sake of time. We got a couple of minutes, so don't feel rushed. So.
Well, we can come back to anything. If anybody wants to look at a symbol, we can come back, or wait till next time. This is another chip. You notice that I'll probably go through 2 or 3 chips here. And I'm doing that because I trade semiconductors a lot. And this is the quarter. Implied volatility is usually lower for all the indices over the summertime. It's this summertime from June on. That's why they say sell in May and stay away kind of thing. Well, implied volatility usually drops, and it's a general rule over the summer. So implied volatility, again, when I'm putting these on and it's at 0, yeah, it could go lower, but the odds are given enough time, it's going to go up rather than keep going lower. Because if it's the lowest point of the whole year, yeah, it just went down a little bit here too for the couple of days. But I think by the time I get up here, I think I expect it to increase again. Again, the Fed meeting is June 14th, about where my vertical cursor is here. So I'll probably end up, this is a little confusing. Just concentrate on the oval first. I'll explain that really quick. The oval was a straight calendar. And it was, again, when I opened the calendar, here was the stock price. And so again, it was a 30 delta. And again, this one closed. This was a pretty good trade, closed almost right there. So I closed this trade altogether. Now you can say, well, there's still a month left. I could have managed, I could have done something here. I could have sold another call or whatever. But when it's right almost at your peak, it's like, take it off and do another trade. So that's what I did. I just took and here was I opened this calendar just in the oval, just looking at the oval, opened that for 294. And I closed it for 533. So it was a $2.38 profit over less than a month. Oh, I'm sorry, less than 7 or 8 days here. That's this one. So because I closed this one, then I opened a calendar here. But just I wanted to point something out to Gene while I had this one up. When I bought this calendar for the debit, I also bought this longer call for $680. So this is more expensive, but it was out 4 months. So this went past the next earnings. So my plan for this long call is to manage it along the way and sell calls against. If I get another high big green candle, I'll sell a call right at that point, probably above this long call strike price, and manage that over time. Meanwhile, I just put on another calendar 1 by 2, and we'll see how that goes. So I want to move on to the next one real quick. What was the next one? QQQ. Okay.
Dave,
Yeah, go ahead.
it's Jean.
Yeah, go ahead.
What I'm noticing is you're saying that you want it to go to the short strike,
Yes.
but you don't want it to hit it because then you're going to get assigned. Is that correct? I mean, that's like, how do you call that?
Okay, well, I'm not, if it gets to the short strike at expiration, that's the best time to close. If it gets to the short strike and you've got time remaining, then you have a decision to make. Do you want to hold, or do you want to risk, do you want to, roll out and up, or, you have to make some decisions there. So what you want the gradual move to the strike price, but not, here's one that's not moving quite good, but I wanted to show it. This is the cues. And sorry, Gene, I don't mean to cut you off.
No, that's okay. That's okay.
I'm just trying to keep this short. So this is the cues. I thought the cues might be rolling over when we put this on. So this you see at the money. This is an at the money or a neutral calendar, where I'm just hoping this doesn't go anywhere for like 1 month by 2 months. Again, it's 1 by 2. So when I say 1 by 2, I mean the short time period is half of what the long time period is, ish. Let's say ish. So again, here's the Fed meeting. Here's by the way, there's when you're doing a lot of these, when you have short calls, you got to be aware of distributions. This came up a couple of weeks ago in a butterfly trade. I think somebody had issues there. So this is the distribution case for all the major indices is in middle of June, again, just after the Fed meeting. So again, I expect volatility to increase here, and I'm hoping it comes right back down to here, but good chance I'll end up just managing this into something else when I'm approaching this short strike, turning it into a vertical, or maybe just extending, maybe I'll just roll out the long call and add a different short call. So that's that one. Now, real quick, we'll go to Lyft. Sorry, if you guys need to, just cut me off if you ever want to just cut me off. I'll be glad to cut me off. But
I think we're good, Dave. No worries.
Real fast here. Okay, so this is kind of like a a trade with an idea on an industry group. So Lyft, this is like the coming out of the pandemic, how do I expect this to move? So I put this on, this is a put calendar below. So I'm expecting this is my bias is that this will trade lower over time, and that the implied volatility will pick up. As you see, I was wrong in the first 3 days of implied volatility, stock price went up. And when stock price goes up, usually the implied volatility is going to fall. So note that on your call calendars and whatever, that your implied volatility might be working against you at the time that the beta is working for you. But when you're using puts, usually you get a double bang for the buck, because if you're getting the direction right, you're usually getting implied volatility increase as you're going down. So anyway, that was the thought. Now, Lyft, I put this trade onto the downside, even though this was down. Let's move out a little bit. Let's use the whole year real quick. So this is the whole year, right? So this is Lyft going up when nobody was doing anything for a year. So I'm thinking, and this, by the way, this looks like it might even eventually turn into a head and shoulders kind of thing, which is not good. So again, I'm playing to the downside here. So we'll see how that goes. It was a pretty cheap trade to put on. It cost me all of, let's see, $1.12 to put on. So it's a Delta 8 when I put it on. I think Samir asked that earlier. Again, when I'm playing direction, I'm usually looking for a standard deviation over the short term. And then I just use the same strike if I'm going to use a calendar. Okay, so that's that one. Again, IV was 3%. IV percentile was only 3% when I opened this trade. But again, it went up a little bit, so it's now down to about 0. So the last one I want to show was AEO. This is earnings today. So this is American Eagle. Again, you can see this is a brick and mortar store where, you know, they weren't. If you look at the, I got to move mine out of the way here. The earnings has been like nothing for like the year, because it's been a pandemic and all these, you know, go to the store, go to the brick and mortar places have been closed. So yet the stock has gone up considerably. It went from like 10 or 11 bucks up to 37. So again, I'm playing this to the downside. Here's the stock price when I put the calendar on. So I used the 30 strike. So it's below 34 by standard deviation, maybe even a little bit more, because I thought it might be. And today is earnings. So that's interesting. And well, next time, this might be an interesting trade to go back and look at to see what. I looked at this at noon, and I was in the money by a little bit. I'm probably in the money a little bit more. So if I closed it here, I can make a few cents. But I want to see if this one's going to play out. Now the problem with waiting is that the long put here is going to lose substantial IV after today, no matter what, because we'll know what the earnings is. Now, if price trades down because of earnings, then I may end up having a good trade by, you know, another week, but we'll have to see. So I usually have a 2 or 3 ways to go, depending upon, you know, when there's an implied volatility event on the calendar, and I have one of these trades on, I know that it's going to affect the long option, whether it's a call or a put, significantly. So those are the things you have to think about. Again, I didn't have much into this trade. I only had 67 cents. And it's, you know, but the point is these are pretty low cost trades to get into. I missed one. Anyway, I've probably run over the time here. So let's anyway, those are calendars, diagonals, and a whole range of different applications that you can use them for, depending upon what your thought process is on any particular underlying stock. So anyway, that's what I wanted to show, some flexibility here. And if anybody wants to talk about these after or separately, you know, we can talk about them, or can go into a little bit more detail next week. But over time, sorry for rambling, but I did rush through them pretty quick. Sorry.
No, sorry to make you rush, Dave. No, I didn't want you to rush. You did a great job. But yeah, does anybody have any questions for Dave on just kind of what he went over?
No, Shawn, this is Joe. I would just say, Dave, thanks for that. And, you know, a lot of really important concepts there. I think we can piggyback on that stuff for next week's call.
Yes, and well, by the way, a couple of years ago, maybe 2 years ago, maybe, I don't know, when we were meeting and live and in person, I think I went over calendars and diagonals for one of those meetings, and I sent out email to everybody, kind of like a little cheat sheet that I use. Anyway, I put that up on the collaboration tab here on Delphian. I have them in Google Sheets. I wanted to import them because they had color, you know, they had some highlighting and stuff, but I couldn't figure that out. So I'll talk to you guys later. But anyway, there's a verbose description on how and when to apply these two types, these time spreads. It's on the collaboration tab. So anybody wants to send me feedback on that or whatever, or we can update it, change it, make it better, leave it the way it is, whatever. So it's out there on the collaboration trade on the Delphian.
Thanks, Dave.
And,
Yeah.
Thank you.
hey, Gene,
Yeah.
we'll come back to you. We'll come back to you next week also about that whole conversation about exposure to assignment.
Okay. Thanks.
Yeah, and then I wanted to make a note too, you know, to Gene and obviously to everybody else, because it's really important and it's something that I know I keep saying, so I'm sure you guys are tired of hearing it. But it's about like a plan, in my opinion, you know, and how Dave had listed on there, you know, the Fed date, the Fed announcement date on the chart, and then he had listed on there the ex-dividend date. So those are really critical factors that are upcoming regarding QQQ and even dividends and earnings regarding, you know, American Eagle or whatever. But those are all critical points that really could impact the outcome of your trade. So to have those dates noted on, you know, a sheet like that or somewhere on the trade, to have that plan ahead of time is crucial. Because again, if you don't know earnings are coming up, or if you don't know a dividend date is coming up, that can really just affect the price, obviously, of the stock. And something where you might have predicted or you might have did your analysis to where you're correct, but just the timing of that event is right in the middle of it. So, you know, like Dave showed with that one, to have, you know, the QQQ, obviously have the Fed meeting, you know, still valid during the short option, but then have the ex-dividend date on the long option, which avoids the short option like we've spoke about before. You know, all that's just adding pieces in there, and I think it's really great information. It shows you that putting that stuff into your plan is critical. So,
Actually, Shawn, I think it's really critical because it just happened to me. I did not notice the dividend on Amat,
right,
and so I got assigned. So I closed it as quickly as possible, and then I sold some put spreads to try to make up a little bit of the money that I had lost on the assignment for being, you know, you're short those 100 shares whenever that happens.
right.
So that was a lesson
Right.
learned. Okay.
Yeah, and like you said, oh, sorry, go ahead, Dave.
I'm sorry too. And Gene, the part you want to really avoid is having to pay the dividend when you get called away on the ex-dividend date too. So
I know, because I got that letter from Thinkorswim, and I'm like, what are they talking about? So this morning I went in and I saw that I had, you know, was short those 100 shares of Amat, and I know some of that included the dividends. Yeah.
By the way, I put that dividend risk kind of like trick to know how much you might be in pain if you get caught. It's also up on the collaboration trade tab. So
Thank you.
You know, for posterity, I guess.
Yeah, thanks, Dave. Yeah, and that's exactly, and it's hard. I mean, it is hard to have everything noted of what's going to happen with Tesla over the next 2 weeks, because there could be a lot of information out there. But if you can kind of figure out what those known events are and know if that's impacting your risk on the trade, it obviously is fruitful, as Gene just mentioned, to kind of take the time to make sure you make note of it, because, you know, the last thing you want to happen is like Gene said, you want to get called away. Now negative, you know, now you have short the shares that you weren't expecting to be part of. Now you've added a whole other thought process that you have to add into the trade. And not only are you trying to do that, but the market's moving and you're a little bit stressed because something happened. So, you know, there's a lot to take in, but, you know, just kind of work through the process, set up a process, work through it. and try to apply it to each time you do a trade. And I think it will help you in the long run. So.
Thank you.
Yeah, no worries. Other than that, yeah, we ran over time, but what I do want to look at is, a lot of those trades that Dave spoke about just now, not a lot of them, but some of them, are a calendar, like a long call calendar spread or a long put calendar spread. So those are strategies that we have access to as individual strategies within Delphian. So feel free that if you kind of get the strategy and how he's talking about it, to try to test some of those strategies within the platform and see how do they work with like a lower implied volatility, or how do they work with a higher implied volatility, and what's the difference between the two. A really great learning tool. But we'll go over some of those. I'll try to see if I can come up with some examples, or maybe if Dave can, within the Delphian platform, we can back test some of those strategies, and then you can actually see those strategies too in past, and we can kind of work through them day by day to see how they react, based on certain market movements and things like that. So I haven't tested many in the platform, but I'm going to try to do that so I can show you guys some examples. And like Dave mentioned, if you have any questions and you feel open to ask him some of those questions, he seems pretty open to answer them for you guys. So I would use him as a resource if we can to get some information, because I in my mind, and even what Joe had mentioned, I mean, some of those trades looked really good, and for the low risk, those seem great trades, but you want to obviously make sure what your risk and what your profit potential are, when you're putting those on, just so you can be comfortable doing a different type of trade. So thanks again, Dave. I appreciate it.
All right. Well, thank you, everyone.
Yeah.
I appreciate it. Reach out to us if you have any questions. Sadir will get working on that list you gave us. And, thank you, Dave. Thanks, Shawn and Joe, and everyone that attended. If you guys have anything else, just let us know, but thank you.
Thanks, guys.
Meeting, thank you.
Thank you.
Thanks,
Bye,
Dave.
everybody.
Thank you. Goodbye.
Bye.
Thanks, Shawn and Josh.
Yep. Thanks, Dave.